Hello everyone, welcome to the course. This is an introductory video for those that are about to tune into the course. I would like to first welcome you to the IB Business Management course for the winter. Um, you could be tuning in from inside of Korea or outside of Korea, but it doesn't matter where you are. Hopefully you are very excited to learn more about the course and actually enjoy the journey. My name is Steve, and a little introduction about myself. I've studied at University of Hong Kong, majoring in accounting and finance. I've been teaching IB students for I think consecutive about 6 years now. I have various experiences. Started off at teaching at local academies and expanded, and obviously I've gained experiences in international schools in Korea and also in Hong Kong. And also, I've taught various summer and winter courses as an instructor, ranging from IB Economics to IB Business Management. And yes, it's been a very fun journey, and I am very sure that you will be able to enjoy the course. So for today, we're just going to go through a very quick introduction of what the course will cover, and also just to walk you through one small concept within the syllabus to give you a rough idea of what you can expect. Right, so for the course outline, I'm sure that if you have already chosen to take IB Business and Management, it's probably pretty clear of what are the units that you'll be covering, right? So you have Unit 1 to Unit 5. The first unit will be covering business organization and environment. Here you will learn some basic terminologies and basic understandings of how firms work, right? And how firms get their money. What are some of the different forms of the capital structures that a company might have, and some other minor details that comes within the unit. And second unit, you have human resource management. So in short, we usually call it HR, right? So this is something to do with hiring people, managing people within the firm. How do you fire people? And how do you sort of manage them, right? We're talking about leadership styles, we're talking about corporate cultures, and many more. So it is a very interesting chapter as well. The third unit, finance and accounts. I would like to stress that this is a very important unit, right? It does have a little bit of math, but I wouldn't say it's a high level mathematics. It's a very, I would say, elementary level math. It's more to do with actually understanding the relationships between different financial statements and some of the analyzing techniques that are required. We'll be covering, first of all, why do you need to know these numbers? Why do you need to know these ratios, right? What are they used for, right? So all of these will be covered in this unit. And we have the fourth unit, which is marketing. Here you talk about, how firms strategically come up with marketing plans, right? Whether we're talking about commercializing your products, promoting them, talking about nowadays the boom of e-commerce and all these intertwined concepts, right? When it comes down to a company's marketing aspect. And finally, we have operations management, which is the last unit. And I would say that out of all these 5 units, this one is perhaps from my own personal experience, the least, I would say, exciting part. But yet again, you are required to know them, right? So please make sure that you'll be able to understand them throughout the course. And I'll be covering all these 5 units within the designated time period. All right, so for today, we're going to cover the concept of investment appraisal. Right? So you'll be hearing this term quite a lot, and I picked this concept personally because it is something that is very relatable to our daily lives. Okay, so we're talking about, when you're actually become an adult, right? You will be, in one way or other, right? You need to have the awareness of investment appraisals. Okay, and the term investment. So in the textbook definition, we define the term investment as the purchase of capital goods used in production of other goods, right? And it is an expenditure by the business that is likely to yield a return in the future. So I would say that the last part of the definition is perhaps the most important one, right? It is likely to result in some sort of a return in the future. Okay, so examples are, for example, you might, as a company, right, you might decide to buy a machine, right, or vehicles, right, that are required for a business. Right, so then what does it mean by investment appraisal? Right, investment appraisal it describes how a business might objectively evaluate an investment project to determine whether or not it is likely to be profitable, right? And it also allows business to compare different investment projects. Right. So you can think of it this way, right? You let's say that you're a business owner, right? And as your business progresses, right, we can use a very simple example of lemonade stand. Let's say, okay, you're owner of a lemonade stand. You might start off on your local neighborhood street, right, on a lemonade stand. And as your business grows, you start to make more money, right? Your business is flourishing. Eventually, you will want to expand your business, right? And as you expand your business, you will have multiple options of how to spend your earnings, right? So how do you invest the money, right? But then again, a lot of the times, assuming that you have limited amount of money, you're not going to be able to invest in every option, which means you'll be deciding on which project you want to invest your money in. And this is the technique, or let's say the knowledge, that we will be learning when it comes down to deciding which project to dive into. Right, okay, so that obviously answers the question, right? Why do business invest? Hopefully you'll be able to answer that question now. Right, but then again, right, it is important to understand that even for successful businesses, right, we can use let's say, an example of Tesla, right, which is perhaps the biggest company, right, owned by the richest man, Elon Musk, right? Do they need to invest? Of course, right? They perhaps will go through an even more difficult investment appraisal process because they have such a large money at stake, right? Then you might ask the question, well, if you're already so successful, why do you need to keep on investing? Well, that's the thing, right? In order for a business to stay active and able to operate in the future, it needs to start to look into different directions and new ideas as it goes on. So that's why recently they have launched the Cybertruck, right? Hopefully you have heard of that if you do pay attention to the news. But it is very fascinating of how businesses of different scales have to make different scale of investment business decisions. Okay. Right, so there's going to be different quantitative methods, okay? There are 2 or 3, right, depending on whether you're taking the SL course or HL course, right? And the main quantitative methods a business might use when evaluating these projects, right, all of them are mostly based on these 2 terms, which is very important, okay? Capital cost. Capital cost is the amount of money spent on the new investment, right? So let's say that you want to invest on this new project of developing, let's say, a new smartphone, for instance. Well, then let's say that it requires $10,000. Well, that will be your capital cost. Okay. And the next term, which is also very, very important, and you'll be hearing it a lot, is net cash flow. Right. So this refers to the amount of money the business expects to receive each year over the life of the investment project, minus the estimated running cost. Okay. So you can think of it this way, to give you a very simple illustration. Let's say that you have original capital costs of, let's say, $1 million, okay? And for most of the projects that you invest in, you're not going to get it over within, let's say, 2 or 3 days. Usually we're looking into periods of 5 or even sometimes 15 years, right? It's a very long project most of the time, okay? So every year, right, there's going to be an expected amount of cash flowing in to the business, okay? And obviously there's going to be estimated running cost per year, okay? So let's say that there's year 1, year 2, year 3, year 4, and year 5. Well, you're going to have respective cash flow of coming in and cash flow that's going to be go out. So the net amount, let's say that the first year you have $10,000 coming in and $5,000 going out. Then your net cash flow for the first year will be $5,000. So it's a very simple concept, and a lot of the things, the quantitative formulas that we'll be using will be heavily based on this concept of capital cost and net cash flows, and how we sort of connect them together to yield a certain quantitative outcome for us to compare which project to invest in. Okay, so yeah, this will be the end of the video for now, and for further covering, we will be diving into them in a lot more details throughout the course. Okay, hope you enjoyed the video. Thank you very much.